Yeah, so hello guys. So coming to the market, I saw this trade I would have taken actually if I was in the market. Although I wasn't able to catch this trade, but I just want to analyze it for us so that we can see what we are talking about and we can get to know how to analyze very well. So you already know what I look for. I said I look for short-term low. Okay, let me delete this. A short-term low to a short-term high. Yeah. So now we now have another thing here, a short-term low, short-term high. If we look at it very well, we see that after this short-term low, we still have another low here. After this low, it's not broken with displacement. We still have another low again. So we are going to use the last low, which is this low here, meaning that now have to change our short-term high. This will now be our short-term high, and then this will now be our short-term low. Our short-term low was broken with displacement, as you can see, and then that displacement candle houses an imbalance, a valid imbalance, because like I said there are imbalances that are valid and some that are not valid. You have valid imbalance there. So now I have already seen that the gap between my short-term low and my short-term high is very wide. But let me say the gap between my entry point, which is here, and the gap between my entry points and and my stop loss level is above. Okay, this is 0.09. So let me check it very well. Okay, okay, so this is 0.1. So for this I'm going to take a 1:2, 1 to 2 risk reward. So that's what I actually used to do. 1 to 2 risk reward. So we have 1 to 2 risk reward here. So what do we have? We have 1:2 risk reward. This thing is changing. So we have 1:2. We have 1:2 risk reward. So for this trade, I would have taken 1:2. I always say 1:3 is the best. There are some trades that I'm going to take 1:3, and there are also some trades that I would love to take 1:4 or even more, depending on the size of this. Now let me show you guys something. I hope you guys can see this. Oh, sorry, that's went off. This, let me use this too. This right here, this percent right here, once it's close to 0.1, or let me say once it's close to 0.1 or is 0.1 and above, I'm going to take a 1:2. But if it's less than 0.5, maybe 0.6, 0.7, I'm going to take 1:3. But let's say it is but let's say it is maybe 1 ratio, let's say it is 0. Maybe 0.2, 0.3, 0.4, anything below 0.05, I'm going to take 1:4, 1:5, but I prefer 1:4 for safety purpose. All right, so this is how you do it. This is how you play the game, so you won't get caught up with the market. So that will be all for today.